let's get in a few more experts to talk about today as well as the near term. Vikas Khemani, the CEO of Edelweiss Securities, now joins in, and in a bit we'll also speak to Amit Gupta as well. Hi Vikas, good morning. We seem to be struggling to find some direction. Yesterday, in a matter of minutes, we lost nearly 1% from those highs of 8,400. How is the near term looking for you? And do you think we've put a bottom in place and the worst is behind us after this near 10% correction?
So Sonia, I think sometimes no direction is also a good direction. So I think we are in that phase. Currently, I think we are in a consolidation phase. As you know, the quarterly earnings seasons are more or less getting over. While there has not been many disappointment, but I think it has been muted earnings season. And I think from a real growth pickup perspective, we are still some time away. And also we are in the middle of a few international events, local events in terms of RBI rate policy in next month. So I think you right now are sort of having any strong trigger from a growth perspective, and there are quite a bit uncertainty around in the environment. So in this phase, it is sort of natural for market to consolidate. And that is what I will see. And downside will be protected from the fact that I think we are in a very good, nice macro setup from a medium term to long term perspective, and I think that provides the protection to the downside, and long only funds sort of come and provide that support, both domestic as well as international funds. So I think that's where we see base getting formed around 8,000 levels, and probably if it goes another 5-7% from here, you might see somewhat selling pressure coming. So I think we will be a nice range for some time, till the time again the faith builds up around the pickup in the growth of the economy and on the corporate sales and the earnings.
Okay, Vikas, hi, morning. That was my colleague Reema. This is Sonia here. Sudarshan was also telling us just about 5 minutes ago that consolidation is always a good thing because smart money is accumulating during this consolidation. So if there is accumulation taking place, where is it happening? What are the pockets that offer value now?
See, I think, I don't think right now in India, markets are, if you look at in a fair value zone, so there's no deep value left. So I think one has to look at now, in my opinion, from a growth perspective, which are the areas which will grow if the economic growth returns comes back, and I think what are the sectors likely to do well. And, the sectors which are leveraged to the economic growth, aligned to the economic growth will do well, and that is where I think most of the buying and shopping happening. So sectors such as banking and financial services, we see at the lower level the consistent buying happens. Funds kind of keep on increasing exposure to that sector, both private and public sector banks and others segments in BFSI space. So I think that is the one segment which remains fairly largely favorite of most of the institutional investors, and I think that is where long-term money is coming in. Other sector, I think, and segments where I guess the money that keeps on coming is, I think you will see automobile. Despite poor numbers, stocks have not corrected significantly. They have been consolidating nicely in this range. So as and when the growth returns, you will see good operating leverage coming into these names, and hence you see good buying coming through. Cement is another sector which is looking very good, and at corrections you see stocks buying emerging. Some select mid-cap names you see good buying coming. EPC, construction, capital goods spaces where you see good buying emerging. So sector by and large which are aligned and leveraged to the economic growth coming back, and also capital investment cycle are likely to do well. That is where you see good interest emerging.
Off late, we've seen the FIs pulling out money from the Indian markets, while DIIs have been strong buyers in the cash market. You speak to various investors, across the board, across geographies. What is the sense that you're getting? Do you think the FIIs disinterest, at least for the near term, in the Indian markets will continue, and the DIIs will pump in good money?
I think, there are two trends which are very clear. I think, in the recent past, last year, India, in most of the money India has received is from emerging market funds. And in India, emerging market fund setup, most of the funds last year were underweight China and overweight India. And that trade has started reversing. A lot of funds I know have started investing into China, and those markets have done well. So that underperformance because of that position has triggered off, and that is forcing some of the people to sort of go back and get exposure to China. So these are the short-term adjustments which always take place. These are I would call technical, liquidity or other factors. So hence you are seeing somewhat adjustment of those exposure towards India happening. Long-term trend, according to me, from FI perspective, continues to remain very bullish. We will see, in my opinion, a new trend emerging where India dedicated funds will get formed, because currently if you are part of the emerging market baskets, and hence you can only go so long, only so much long on India if you're part of that basket. So in next 12 to 18 months, in my opinion, a lot of India dedicated funds will start, because that's the only way to get sizable exposure towards India, not through emerging market. And that trend will pick up, and that will accelerate the flows to India. And secondly, I think as far as the domestic is concerned, I think domestic is the only, when domestic investors invest, I mean, they can't go anywhere. So the money has to come into Indian markets, and I think that's a very good trend, because I think, as you know, Indian investors, especially the retail, are very, very under-invested into equities as an asset class. And I think we have seen this year a good amount of money coming through mutual funds, and which is a very good trend. I do believe that that should accelerate, that should continue as we are in a early stage of a bull market, and earlier investors come into this cycle, it is much better for overall health of the market.
Okay. Vikas, this quarter we've seen a lot of pedigree consumption companies report a slowdown in earnings, names like Asian Paints, Hero Motocorp, etc. And we were having this discussion with Ramdev Agarwal yesterday, and he said, don't worry too much about a one-quarter trend. These are good quality companies that you should continue being invested into. Is that the sense you're getting as well, or do you think that some positions should be trimmed off from, some of these consumption names?
No, I think, see, when somebody runs portfolios, these are the calls one has to take. According to me, I agree with Ramdev that these are the high quality companies. If you want to compound over 8 years, 10 years, you can't, optimize on a quarter to quarter basis, because nobody has been able to so far get quarter to quarter optimization right in any stock, because markets don't behave the way you expect. So, if you are a bottom of stock picker, these are the high quality companies. They have delivered superior returns over the years. So there's no reason for, and I think, good businesses and good markets, and markets are going to grow in the next 10-20 years. So there's no reason for you to get worried and exit for one quarterly earnings. But if you're running a portfolio, if you're worried about your outperformance in the short term, you might do that. So from that perspective, you might see some of the FMCG companies underperform because they are expensive, and as the realignment of the exposure happens from a defensive segments to as I said, economically aligned sectors, you might see that kind of underperforming. But that is all tactical. That does not make Asian Paint or consumer segments bad. And according to me, all these companies are, consumer segment is going to grow. It is only right now we are in a slowdown phase as spending in the economy has been lower, especially in the rural side, and hence you are going to that adjustment phase, consolidation phase. As the economic growth picks up, you will see these companies also reporting good numbers and good growth.
Vikas, have you reduced your exposure to any sector or any particular stock in the last 2 months?
No, I think if you ask me last 2 months, 3 months, our view on the markets or the strategy has not changed. I think we remained, we do believe that India is going to be a balance. I mean, we will see lots of investable opportunities, and you have to have a balanced portfolio between domestic as well as exports. And I think in both of these segments there are lots of opportunities. So we haven't changed any significant view on anything over last 1 or 2 quarters. We believe that this correction offers a great opportunity to buy into some of the mid caps, because they have corrected significantly. Some of them have corrected 30-40%. So I think this correction has offered brilliant opportunity to sort of buy some of the mid cap names.
Okay, on that note, you have a good day, Vikas. Thank you as always for joining us and talking about the markets. That's the word coming in from Edelweiss. 8,000 is a firm base for the markets, at least for the near term, and there is plenty of accumulation that's happening in individual stocks. We'll head into a short break now, but we'll come back just in time for the pre-opening.